Hey everybody, welcome back to the channel. My name is George Herrera with the Queens Home team at Keller Williams Realty. In today's video, I'm talking about home improvements and answering the question, are home improvements tax deductible? And also, I'm gonna dig a little deeper into that question because I'm sure a lot of you already know that home improvements are tax deductible. So here in this video, I want to go a little deeper, give a little bit more of specifics into home improvements that are tax deductible, home improvements that you can get tax credits for, and pretty much how you can use the benefits of home ownership and doing home improvements in order to reduce your tax liability or your taxable income. So here I'll just jump right in. It's pretty much based on an article that I read recently, and it had some good information here. So I'll just give some of the major points and then talk a little bit about here in Queens and in New York City, how some of these might apply. So first thing, while some home improvements qualify for tax deductions, others qualify for tax credits. Okay, so there is a difference between tax deductions, which reduce your taxable, which can help reduce your taxable income, and also tax credits. Here we go. What home improvements are tax deductible? So specifically, if you're a homeowner, you might be wondering what home improvements are actually tax deductible. And so here's just like a quick list that I can give to you, which is not a complete list, but it gives you an idea of what it is. And just put simply, right, in the most general sense, tax deductible home improvements is a major renovation that adds value to the home. So it usually has to be some type of major renovation that adds to the value of the property, and that would be considered a home improvement that would be tax deductible. So things that these projects involve making a permanent enhancement, upgrade, or modernization that drives up the cost basis and the market value of the property. So this is why they're called capital improvements. Those are the ones, so major capital improvements, those are the ones that tend to be tax deductible. And things that would be capital improvements would be things like a new roof, a kitchen renovation, a bathroom renovation, a new boiler, new windows, new siding, a new patio, a new deck, things like that. I even went into ChatGPT and asked what are some of the capital improvements that would be tax deductible on a residential home. And these are some of the items that ChatGPT even listed. So things like room additions, kitchen remodel, bathroom remodel, HVAC system replacement. So even here in Queens, if you put in those ductless mini split units, those also could be, you can get a certificate of capital improvement for that. New windows, new doors, exterior improvements. So like I said, the new patio, a new deck, things like that. Insulation, new flooring, upgrading electrical or plumbing systems. Those are also major capital improvements that would be tax deductible. Home additions, extensions, a new septic or sewer system, swimming pool. That's not as common here, but a new pool, solar panels, things like that would be able to be tax deductible. So again, a major renovation, permanent enhancement or modernization and upgrade to the property that raises the value of the property. So here, now, improvements to your home's energy efficiency are usually available for tax credits. So that was for tax deductions. These are for tax credits, meaning your tax will be lower than your taxable income. Okay, so these are now tax credits. Typically, tax credits yield more of a savings than deductions. So if you can get tax credits, that's also always more preferable. And these are some of the ways usually to get tax credits on a residential property. It's actually through energy efficiency upgrades. The government gives a lot of tax credits for that. So here are some examples of that. Some energy home efficient projects that may qualify for tax credits include solar panel installation, a water heater installation, energy efficient windows, doors, and insulation, electric vehicle charging stations, putting in energy efficient HVAC systems. So again, like the ductless mini split units, or any kind of energy efficient, or the tankless water heaters that you see people install now in homes, things like that, you can qualify for tax credits. Geothermal heat pumps, I've seen those offered also if you go to Con Ed, and Con Ed has some programs also to modernize and have energy efficient upgrades for your heating system. So things like that would qualify for tax credits, and those are actually very good for your tax bill. Also, you can get it's deductible if you do home improvements for medical care. So, and this is very common. We work with a lot of homeowners who are taking care of a parent, or taking care of a loved one who is sick or disabled or anything like that. And sometimes you have to modify your home in order to accommodate them. And those improvements, those modifications can be tax deductible. So the IRS allows deductions on renovations made to accommodate those with special medical needs. Such improvements must alleviate or prevent a physical or mental disability or illness. So some of the improvements that may be deducted as medical expenses include ramps or handrails, bathroom grab bars, modified doorways for wheelchairs or walkers, lower cabinets and countertops, therapeutic swimming pools, alert lights and alarms, things like that would be able to be tax deductible for any kind of medical care, any renovations or modifications that you have to do in order to tend to someone and their medical needs. And what I suggest is that you should have a profit and loss statement for your home or your properties. My wife and I, we do this. I have a P&L for each property, and every month I update based on any expenses that were spent for that property. And then they go into a profit and loss statement, all of the expenses with notes. And then what happens is that at the end of the year, when you file your taxes, or the following year, when you file your taxes, you send your accountant the profit and loss with all of the notes, and any you have your invoices and receipts and things like that. But just having the profit and loss with all the expenses itemized, and then notes on them, and then you let your accountant know, and they'll be able to use that to get you any tax deductions, tax credits, anything that you would qualify for. So just keeping track of all the expenses on your property is one really good way to do it. And to have a profit and loss statement is a really easy way, and you just have to update it monthly. If you want to get a copy of the one that we use, then you can email us, or you can email me, and I can send you the one that we use. It's george@nyhometeams.com, or info@nyhometeams.com, and we can send that to you. So now, just to recap, to finish up here, the other another tax deduction for residential properties is rental property maintenance. So rental property maintenance is another way to get tax deductions on your property or on your tax bill. So what kind of so if again, this is just like I was saying, where you keep a P&L, profit and loss statement, itemize everything. If it's a rental property or an investment property, or even if it's a 2-family, 3-family, you live in one and the other are investment units, you still keep a P&L, itemize all your expenses, keep track of it monthly with detailed line items, detailed notes, and then when you file your taxes, you send that to your accountant, and everything is in there. And then if you have certificates of capital improvement, if you have tax credit information, when you do the work, then you send your accountant all that information as well. So rental property maintenance, that's a good one. And then now here, what kinds of improvements are not tax deductible? That's going to be your things like your routine repairs, painting, new carpets, new furniture, decorations, appliance repairs, home security system, things like that. Now, even though some of these aren't tax deductible, again, like I said, what I do is everything we spend on that property for that year it's in that profit and loss statement, and it's a detailed line items with notes so that the accountant can see what each expense was for, and then the accountant will know which ones qualify for tax deductions, which ones qualify for tax credits, and then you can, so they'll be able to, if you lay it out that way, you make it easier for your accountant to get you as much deductions and credits as possible. So that's a really good tip that I would give everybody. And it's just once a month updating it. And again, if you want to get a copy of the one we use, then you can send us an email and we can send that over to you. So now, tax deduction versus tax credit. The differences between tax deductible improvements and those eligible for tax credits come down to the scope of the work and the value the improvements add. Tax deductions, which reduce your overall taxable income and exposure, are generally reserved for home improvements that permanently increase your value. So again, the major capital improvement, that would qualify most likely for a tax deduction. And expenses that qualify for tax credits are usually related to keeping your home up to date, especially in terms of energy efficiency. A lot of times, the energy efficiency, that is what a lot of times qualifies for those tax credits from the government. Okay, and again, capital improvements, the three things that they have to have, the three criteria are they have to be permanent, they substantially increase the property value, and they extend the useful life of your home and property. So that's what would be considered a capital improvement, and those are the ones that most likely would qualify for a tax deduction. If you have any questions about that, feel free to reach out to us. And again, my main bit of advice would be keeping a P&L for your property with all your expenses, updating it monthly, and that will help you take advantage of all the tax deductions and tax credits once it comes to tax time. But definitely keep this in mind as you do improvements, upgrades, renovations to your home, because the last thing you would want to do is have improvement made to the property or install something new that makes your home more energy efficient that you could have gotten a credit for or a deduction and then not take it. So you want to make sure that you take advantage of everything that you can. All right. If you have any questions, feel free to reach out to us at our website, www.queenshometeam.com, or you can contact us at the info below, and we'd be happy to help in any way possible. Thanks as always for tuning in, y'all. Stay tuned for the next episode. Take care and have a great day.